we're strategically positioned, we believe, to achieve profitability in the coming 12 months. We have spoken about reaching it earlier, and really as recently as the coming quarter. One of the key things we're going to focus on is investing in growth. We really had a decision that we were facing of we could focus on profitability, or we could focus on growth, and you can't save yourself to growth. And so we've made a decision, a conscious decision, that we're going to spend a little bit more in marketing and sales in the coming 2 quarters, because based upon the industry momentum that we've seen, again, I'm pointing to for 22, now is the time to strike while the iron's hot. We believe that positioning ourselves over the next 2 quarters will pay off long term, but we really do have a growth to achieve profitability within the next 12 months.
Thank you. And your next question asks, what does the sales pipeline look like for CleanSpark for 2021?
Great question. As I mentioned before, we do have already strong under contract, $6.5 million approximately, and we currently have proposals outstanding that exceed 12. We expect that to grow even quite a bit more. As I mentioned, we're focusing on partnerships. Some of our partnerships, even some that we haven't announced publicly yet, they're in early stages, but we have very high hopes. So again, our push is for no less than $20 million in revenue in the coming year. We will definitely be keeping everybody updated. That proposal pipeline and of course the contracted backlog are very important numbers, and we'll update those at least quarterly as we continue to see growth and success. Also, as we do M&A and acquisitions, those numbers are going to change, and we'll of course let the market know what our expectations are and how that's modified based upon any acquisitions we may do.
And your next question is, since you hit your revenue numbers for 2020 despite pandemic concerns, might you consider upping your revenue projections for 2021?
Great question. We believe in under-promising and over-delivering. As we monitor the pandemic situation, we're definitely going to keep an eye on that. What we did and we made a choice to do is really reaffirm the guidance we'd already given. I think that there's a lot of critical moving pieces that are going on right now. We've got the pandemic, which optimally is reaching a point of resolution with vaccines, and there's a lot of high hopes for that in the coming quarter. And I think as we get insight on those, and if I really step back and look at it this way, I think that 2021 will be the year of the microgrids. And I think that as economic certainty increases, we're just going to see even larger growth than expected. But, and that's driven by a few things. Not only the desire for companies to optimize and save on their energy costs, which are increasing nationwide year by year, but we have events like the wildfires in California. We have, hurricane events. Those are happening and getting more headlines and are increasingly more important to companies to be able to manage and protect risk against. So there's a lot of market and environmental reasons that are creating that opportunity. But I think it wouldn't serve us well yet to jump to any conclusions and make any potential overpromises. I would expect us to really by December of this year, we'll have greater insight, and we would likely look to reevaluate and restatus those revenue growths. But again, our target is to underpromise and overdeliver, and we feel very comfortable about the 20 million that we've given guidance on.
Thank you, Zach. And a viewer here comments, the company has stated before that it would only raise money to accelerate growth through acquisitions. And their question is, are the recent 40 million raised going to be used for any acquisition?
Absolutely, that's our intention. So as I said before, we're actively in discussions. As part of the raise, we also disclosed that we didn't have any specific targets that were at a term sheet or later stage. So we I look at a lot of opportunities, and we do a lot of due diligence on opportunities, and that's for the benefit of our shareholders. We will definitely provide further guidance, but I'll just give you a very high level outlook of how we're looking at that capital being used. From a very high level point of view, we're really looking at 5 million being directly invested towards growth in the form of organic sales, partnership opportunities. Another 5 million is going to be to allow us to participate in programs that would be such things as energy as a service. If you read a lot of the studies, which I'd recommend everybody does as they do further due diligence in the company, you will see one of the largest growing segments for microgrids is offering energy as a service. And we do plan to deploy a portion of the capital towards energy as a service. And we have several other initiatives we're working on, but realistically, we really look at looking to deploy up to half of that money raised directly towards acquisitions. And that's, of course, an internal earmark. Those numbers can change, but that's currently our intention is to really focus in on that. So acquisitions are definitely a big priority for us. We are currently looking at several opportunities at the due diligence stage. We'll provide more information as things get further along. One thing to note is the company does not make any announcements when we get to LOI stage generally. We generally wait to make announcements until we're in a position where we know a deal is going to close towards a definitive agreement.
And your next question. Has CleanSpark had new merger and acquisition conversations following the Energy Commission ruling?
We have. There's some very interesting opportunities that we've seen. There's also opportunity. What those opportunities are largely driven by is there's some consolidation happening in the space, and the ruling actually creates some of that opportunity. Again, pointing to the aggregation. When there are assets deployed out there, one thing that the ruling allows them to do is aggregate those numbers to meet minimum requirements. So, small companies are looking for opportunities to pair with larger companies and companies with more resources to actually meet some of those aggregation benefits. So absolutely, it's something that we've seen new opportunities as a result of, and that's actually, that ruling was announced mid-December. It wasn't chance that we decided to raise money, again, speaking towards acquisitions, just a few weeks later, because the opportunities are there and the consolidation is happening, and we wanted to be very well positioned to take advantage of that.
And on to your following question. What gives CleanSpark the competitive advantage over its competition? Will the acquisitions particularly target expanding your software/offerings and capabilities?
So from a competitive advantage, I'll speak to that first. Just to kind of drive some of that home. First, our intelligence. Our intelligence and forecasting is really a key competitive advantage. Instead of being a system that is what I would call, we sometimes refer to it in the industry as a dumb system, meaning it doesn't really think, it just does. So it turns itself on, it turns itself off at specific times. We're an active intelligence. So what that means is it's looking ahead, it's looking at current situations, and it's changing its behavior to achieve optimal results. So that's very important. An example of why it's important is to understand how energy charges work from a peak load requirement. So in any billing period, and it's generally measured by the month in most cases, you are charged a peak rate or demand charge based upon a single instance inside a 15 or 30-minute period generally of how much energy you needed right then. And then you're charged for the entire period for that demand. So if you step back and consider what that means if for 30 minutes in a single day inside your 30-day period, you turned on some heavy piece of equipment, and usually starting up a heavy piece of equipment on a manufacturing facility uses a lot more power than having it running continuously. So when that happens, you have a single peak, and then you let that equipment run in your manufacturing facility for 30 days. Well, that peak you got charged for the whole time. What our software does is it identifies that a peak event is potentially happening, and it will route power from other sources, whether that's the energy stored from a battery or so forth, to mitigate that peak. So that now you're pulling energy from the battery instead of the utility to flatten that load and reduce peak demand charges. Oftentimes, demand charges can be up to 50% of a user's bill. And so that gives you an idea of how we're increasing the savings. Now, how that matters from an intelligence point of view, if you're running on a schedule and what you did is you told your system, hey, I'm going to turn it on Tuesday, the second week of the month, and between these hours. Well, what happens when your foreman decides he needed to shut it down and turn it on a different day because there was a variety of needs that could happen? Suddenly your energy plan, due to lack of intelligence, is really, it's ruined for the entire month. Our software and the intelligence allows a user to behave how they should without having to take an additional thought about their energy use. It allows people to focus on their core business and not just the cost of energy. Secondarily, the agnostic approach we take. I can't stress how important that is because, for example, we've looked at some very large scale projects recently where the user already has, and I'm going to use an example. So these weren't the actual providers, but as an example, if somebody has all GE equipment there, and then Siemens were to come in and say, hey, we would like to provide a control solution. But if that provider, which in most cases is true for the large providers, they only control their equipment. So now you're faced with a remove and replace decision. Hey, if you want to use the new equipment, for a variety of reasons they may want to use, they're now facing an option of you need to remove all the old equipment to get the ecosystem to work and be smart and intelligent. So we can actually step in and actually offer a solution. Hey, if you really still want to use that big name brand provider's equipment, great. We can communicate with GE's equipment and Siemens equipment and make the system work. And so the ability to tell somebody that they don't have to take $1 million of equipment, throw it away, and put a new $1 million in is very valuable. In addition, again, the ability to create a best-in-class approach. The reason that's important for our ecosystem is, again, our customers are generally going to be the contractors, they're going to be the engineers, or even the vendors themselves, such as battery groups, which is a big initiative for us. Well, if you're a battery group and you believe you have some great technology and you want to get out in the market, but you're new, you may have a really hard time finding a controls provider that is reliable. And we can step in and offer our solutions either as a white label or as a named partner with them and allow them to get their new technology, which is generally their technology, really their value is battery chemistry and so forth. And so whether you're a brand new vendor getting a new product into the market or you want to retrofit an existing system, we can play in both sides. And that allows us to really participate at all levels of a microgrid system, both old and new, and we're not really pigeonholed into any one place. We can be very broad. So those are the key focuses from a competitive advantage point of view. I believe there was a second part to that question. Would you be able to give that back to me?
Yes, of course. Will the acquisitions particularly target expanding your software offerings / capabilities?
Okay, great question. So yes, so we're looking at a variety of things. First and foremost, how we look at acquisitions, they have to be accretive, and we're looking for acquisitions to cash flow positively. So we're not really interested in saddling ourselves with any more burn. Profitability is something that's very important to us. But yes, absolutely, we want to be able to either have it be a part of or have our software add to that acquisition. Grid Fabric's a great example. They have a standalone platform for their communication protocol. We have existing customers and we're able to monetize that platform with or without CleanSpark's product. But what we're also doing is we're integrating that platform into Impulse so that Impulse customers will automatically have an option for demand response. I'm going to explain again, demand response, there's a lot of value in that. But how we anticipate using it is we would provide that demand response module to our customers, and we would do so at a very low cost. But how we then get value out of it is, sure, it's a low cost up front, but it's a transactional cost long term. So it may be very low cost on a monthly basis for the software, but when they save $30,000 on a demand response, we would take a piece of that in the form of a transaction cost. Now, that transaction cost, I won't speak to any specifics because it's going to vary customer by customer, and it's really going to vary depending on the utility that they're in and the value that that demand response has in the market. But to drive it home from our ability to maximize revenues, that demand response will really have no cost to CleanSpark except for the sunk cost that we've already put into the software. And then it becomes transactional on the go forward. And our customers will always save more than they would without us. So it becomes something that's a very easy sell to an end customer.
A very thorough answer. Thank you, Zach. We'll continue to the next question. So in the presentation, you touched on the hardware market, and a viewer asks, how's the hardware market evolving? Is that sector more or less competitive compared to 5 years ago?
Great question. You know, the thing about the hardware market is it's a well-developed market. And I would say it is more competitive in certain areas. And where it's more competitive is out-of-the-box solutions, because, you know, when it becomes a commodity, there's a lot of competition, and the place for you to go is to compete on price. And we do have a few out-of-the-box solutions, but we don't focus on those. What we focus on is custom solutions. So we have key customers that look to us because we provide a UL certified solution for them that is specific to them. And that's really 95% of the business we do with our hardware. And it's all specific to microgrids. So it's when somebody says, hey, I have a unique solution, a unique approach to provide, for example, backup power to large retail chains. And we can come in and we can provide that solution. And even though it's custom, it's UL certified. And that's not an easy thing to do. And it's something that the big guys aren't going to do. GE's not going to stop their assembly line to sell 10 systems to a group that they need to go through a full process of certification. We are agile enough that we're able to do so, and we get paid for that value. You know, we get paid in the engineering on the upfront, which has higher margins, and then we have a long-term contract with them for the equipment. But also something to point out about custom equipment is that's a barrier to exit. Once a customer, generally always a customer, because it allows them to continue to execute without any uncertainty due to the customization and the nature of that.
And we're reaching the final few questions of the Q&A, but your following question is regarding microgrids. Where are you seeing the fastest growth in new microgrids, Central or South America?
Great question. You know, first I want to mention, you know, also domestically where we're seeing the fastest growth. So we're seeing a lot of growth in California, and then we're seeing a lot of growth on the Northeast coast, and we're looking to participate, and we are participating in those markets currently. But specific to you know, Central and South America, we're seeing a lot of growth opportunities really in the Central American regions. You know, Costa Rica being a prime market. Costa Rica is a first world country that really has, unfortunately, probably, you know, a third world power grid. And it's because it's shared with multiple countries around it. And there's a lot of US companies that are there, which brings money in to help pay for the infrastructure changes. So we're seeing a lot of growth there. Also, we're seeing some very interesting opportunities in Mexico. Especially in the resort development space, but also in additional communities that we're starting to get further involved in central Mexico also. But you know, places that I see new growth opportunities that we're currently evaluating is Brazil is a great place to look towards. I think we're going to see a lot of growth there. we're also looking at growth elsewhere in the world. We do now have one employee in Europe that's evaluating opportunities over there. And with some of the different initiatives, we expect to hopefully participate in some of the markets there. Australia is actually also a very great market. They've had their own wildfire issues, which has led to growth in the segment. So we are looking internationally. We're first going to focus on our backyard, which is, domestically, California specifically, and then Central and South America, which of course is closer geographically. But we really do believe that our approach and agnostic capabilities to work with any utility and any sort of equipment does give us international exposure that we do plan on pursuing as we grow.
In addition to this question, a viewer asked a very similar question, which you just touched on, but it asks, what is the potential in international markets like Dubai and Australia, and how does CleanSpark fit in?
Great question. So I'll just reiterate it a little bit. Yeah, Dubai, Australia, there's a lot of growth there. We can definitely participate in any of those markets. Again, how we would participate is through partners. So as we develop further relationships in those areas, and there's contractors, that's how we would participate. Is we would create agreements where we are potentially exclusive providers of our software to those groups. Again, I'm going to point to Sunshine as the perfect example, and the way we're looking at our international expansion strategy is, Sunshine has a Costa Rica as a whole agreement with us. So anything they do will go through them. In addition to just their projects, as part of our agreement, they are a distributor of our software locally. And the benefit to that is we're able to educate a local provider about our software, and then they can sell it to other developers. And we don't necessarily have to spend the significant infrastructure costs of having a physical location and direct staff in those locations. And we of course could choose to do so for the right markets and the right places as we grow, but really we're looking at a partnership strategy. We think also that's a much faster way to grow with a lower cost of capital. So absolutely, Australia, Dubai, they are areas we're evaluating. There's a lot of opportunity, a lot of projects in those areas, and we're looking to get involved with the contractors there and expand further and sell our software into those solutions.
Thank you, Zach.